Hey, good morning, everybody. Welcome to today's live. My name is Lunta Di La Paulo. I am excited to be here with you today. We're going to be talking about a very important subject, especially given the fact that we are going through the tax season. And for almost all of us, or rather the vast majority of us, taxpayers, whether you are a self-employed individual, you had a salaried position, you received a W-2 or a 1099, or if you run your own business, right? The tax season is that time of the year that all of us have to report our tax obligation, whether this is going to be with the federal government or at the state and local levels. So today we're going to be talking about how to tell if your tax return was prepared incorrectly or fraudulently. And this is purposeful because there is a mistake, an intentional mistake that there could be it could be made on your tax returns. And on the other hand, there is a fraudulent mistake that somebody actually creates and makes on your tax returns, which is a bigger problem. And the reason that I wanted to do this live today is really to address one of the recurring theme that is becoming a lot more common. People coming to our practice, and it seems like we are starting to see a little bit more of this type of problem. Whether somebody who comes to us seeking for help because their tax preparer stopped replying to them or didn't sign their tax returns or included something on the tax returns that the IRS now has questions about, and they have no idea what is it or how it even got into their tax returns. So today I want to talk about exactly these two problems. Number one, the type of things you need to be on the lookout for on your tax returns. And the second bigger fish to fry here is really the fraudulent tax returns and what to do once you realize you are in a situation where somebody prepared the fraudulent tax returns for you. Just by way of introduction, my name is Lunta Di La Paulo. I'm a CPA. I've been running my practice a little over 5 years now, on my way to the 6 years. And we help business owners across the U.S. with tax preparation, tax problem with the IRS or the state level, business owners who have, who need help to reduce their tax liability legally. We also help business owners who have accounting issues, whether that's clean up, catching up their books, helping them understand their financials or numbers. And more recently, we've been helping business owners really think about what comes next once they get to a place in their lives that they need to begin thinking, okay, one day I'm going to retire. Who's going to take over here? What's going to happen once I leave? And more importantly, if I want to sell a business, how do I capture the most value out of this business sale? Okay. So going back to our conversation today, right? I really thought this is very important because there's a lot of people suffering, going through a lot of pain with taxes with the IRS. Even if you filed your taxes already, this is a good moment for you to actually take a look and see, okay, what was filed for me. And by the way, what I plan to do today is to actually share my screen here to walk you through how you should be reviewing your tax returns once you receive that draft from your tax preparer before you approve it. So we're gonna do a few things here. So before I jump on to share my screen, I'd really want to start with addressing some of the biggest elephants in the room here. Number one, I want us to understand what's a ghost tax preparer. A ghost tax preparer is somebody who pretends to be a tax professional. You hire them, you pay them, but they do not sign their name or their professional tax identification number pin on your tax return. Sometimes they would use a software on your tax returns. It's gonna come up saying self-prepared, right? So the tax preparer essentially is hiding behind you, even though you paid for the tax services to be done, right? So number one, to watch out for. Number two, when you look into your tax return, especially for those of you who have a Schedule C, for example, right, on your tax return, you need to make sure you're looking for any signs of inflated numbers, any rounding numbers that looks too good to be true, right? Any large balances that just screams, hey, I didn't pay this amount of money, right? So we're gonna look into an example here, but I want you to to remember that when you sign that tax return, you're actually signing it under perjury. Okay, you're telling the government, to the best of my ability, to the best of my knowledge, the information in these tax returns is complete, it's accurate, is correct. Okay, so you really want to make sure that, hey, the information you're passing, you're telling the tax professional to file on your behalf is absolutely accurate. Okay, so we're gonna be reviewing, you and I, a tax return here, so that it's a mock return. The data is made up just for the sake of example. Otherwise, we would have serious liability problems here. Okay, I'm gonna go ahead and share my screen for Form 1040 U.S. Individual Tax Return for the year of 2024. Okay, so when you receive your tax return, the first thing you want to make sure you are checking, number one, it's the correct number, the correct year. Is, for these taxes, and we're filing 2025. But you need to check, right? Your name, your first and last name, are they correct? Social security number, is it correct? Okay. Your filing status, are you filing as a single, as married, filing jointly, as a head of household? If you don't understand what each one of these boxes that get checked, okay, you need to ask your tax professional to tell you, to explain, okay, what is this? Okay, so one common thing we often see is married people choosing to file separately sometimes. Okay. So they are rules, tax rules, that requires us to either file married filing jointly or separately, and the couple specific situation. Uh, People who have kids, who have dependent, may be able to file as head of household, right? By default, you would file as a head of household if you maintained the household where your dependents live for at least 50% of the upkeep or the cost of living. Okay. And you need to have ways to document, to prove that you actually paid over 50%. Okay. What is included into upkeep, right? Meals, food, utilities, rent or mortgage, right? Medical expenses. If you have things that supports that, then you can qualify, right? Now, another element here that we often see, right? You see here under standard deduction, or occasionally people would claim an itemized deduction. It's going to be somewhere here as well. Now, if you're claiming a standard deduction, that pretty straightforward. If you are, right, if you were born before January 2nd, 1960, right, you get an additional bonus here if you're filing 2024 return. Make sure to verify the dependent information here: the first and last name, social security numbers, and the relationships to you. and whether or not they are qualifying for any child tax credit or other dependent credits. You make sure you are reviewing this information, because one thing we have seen taxpayers struggling with their tax return being rejected is when situations where somebody else also is entitled to that child, and they claim that child before the taxpayer does, and the tax return gets rejected, excuse me, because somebody else already claimed the dependent. So you want to make sure, okay, you want to make sure that the social security numbers are accurate, and the first and last names are accurate. Now let's move on. When it comes to the income portion, if you're reporting W2, make sure you understand what this number is here showing up. If you had, for 2025, we have tip income, right, that has some exclusion. If you're getting any non-taxable income or tax exempt income, all these would be reported here, right? And then if you had, investments in the stock market, for example, you had capital loss or capital gains, that's going to be reflected somewhere here. And the total of your income, right? So we have here additional income from Schedule 1, okay, of $3,036. We're gonna look into what that is, but I just want us quickly to go through this to the face of your tax returns first, okay? And then the total income here, this line is the sum of your W2 plus this other income coming from your Schedule 1. And then we have adjustments to income from Schedule 1, right? We're also going to look what this adjustment is just in a second. So we have $53,036 less 215, giving us $52,821. And this taxpayer, because he's single here, right? Because he's single, then we have a standard deduction of $14,600, which was the standard deduction for the year 2024. And then we have qualified business income deduction, QBI, which is 561. It's 20% of your income here, right? Your additional income from your Schedule C. And then the sum of the standard deduction plus the QBI gives us $15,164. Now, the difference between the total adjusted gross income here less this total is what gives us what's the taxable income for this taxpayer is. Once we get that, we calculate the taxes according to the specific tax brackets based on the income level. The tax here is calculated at $4,289. There aren't any adjustment, any credit, so this amount flows here. And then we have self-employment taxes that comes here, right? Because it's a self-employed individual, they have to pay the employer and the employee portion of those $3,000 that we have here. And the sum of these federal income tax plus self-employment taxes, this gives us a total of $4,718. Because there was $8,000 withheld from their tax returns, they had an overpayment of $3,282, giving us a tax refund. Now, it looks like everything is great, everything is fine so far. Now, let's look into what I was talking about. Here, right, I included the preparer information. I blacked out our address, our PIN number, right? And but when your tax prepares your tax return, this information needs to be there. right? That's how the IRS knows who prepared these tax returns, right? If you are a pay tax professional, not including this information results into penalties. Okay. So number one, you need to make sure you are reviewing this part if you paid somebody so that they can include their tax, their business information. Now let's keep move on. We have a Schedule C in these tax returns. So here's how you review the Schedule C on your tax returns. Number one, this is clearly a Schedule C, profit or loss from business for a sole proprietorship, meaning they probably either acted as a limited liability company. We know that because of this Electrical America LLC, or they are an incorporated business operating as a sole proprietor. The business code for an electrician contractor, the EIN number, that's a made up number. Okay. And here we have the address is the same as their personal address. The accounting method, cash accrual, most taxpayers are on cash basis. If you don't know what is that, please ask your accountant. Did you materially participate in the operation of this business in 2024? For most of us who are actually running our business, it should be yes. Um, did you make any payment in 2024 that would require you to file Form 1099? These taxpayers said no, but we're seeing here contract labor for $35,000. Okay, that's a big number, right? It's a big number. How come you paid so much money into independent contractor, but it doesn't seem like none of them qualified for you to actually report the 1099s, right? Moving on. Part one, income. A lot of people here underreport their income because they don't want to pay taxes, right? So you want to make sure that the income being reported here, the 78,000 in the case of this taxpayer, actually matches, right, what they have on their books. But here's another problem. Most self-employed individuals are doing a poor job keeping up their books. They think accounting is a drain of their time, but they also don't want to pay somebody to take care of their books. As a result, they underreport their income. Meaning, when the IRS comes knocking on the door, when they find out more income, you then would need to pay penalties, interest, and fines. Right? So make sure that the income that is being reported here actually matches your income from what you made throughout the year. Part two, these are the expenses. And let's look here. There's a lot of round number, right? A lot of numbers that matches exactly to the zeros. That's one of the big red flags, right? That's one of the big red flags. And you see here contractor expenses. This is gonna literally just jump out there, right? Because it's a large number, you better have supports for it. You have supplies here, 14,000, right? It's an electrical business, right? You spend 14,000 in supplies. And as utilities, 15,000. Probably somebody made a mistake here and keyed in, more zeros. So it's important to review that, right? Other expenses, 1,250, right? Want to make sure you understand that the total, right, income 78,000 less expenses, okay, gives us $4,566 as a tentative profit of the business. They are claiming a straight the straight home office deduction, right? 300 square feet, they're getting another 1,500 of deductions here, bringing the income that is gonna be going to Schedule 1 that we saw early here, okay? These $3,000, that's where it's coming from, okay? So you need to understand how the numbers are moving on your tax returns. This number then, it's where self-employment taxes is calculated. Okay, so there wasn't any cost of goods sold there, so we're gonna skip that. This business return, right? So if we look here a little bit, we're gonna see depreciation here of 2,500. But ideally, we want to see the depreciation being taken correctly, meaning we would need to see the asset that is being depreciated. So as I scroll here, I don't see any depreciation schedule, right? There is none, no depreciation schedule. There is another expense, right? He's claiming a straight mileage deduction here, 54% of all the mileages used, right? This is, by the way, another place where a lot of taxpayers lose money, because the actual expenses sometimes, the actual approach of claiming auto expense sometimes gives you better results than actually just taking the straight methodology, right? So I really wanted to make sure, we're looking into the Schedule C so that you understand, right, what's actually happening here, right? How the numbers are flowing or moving on your tax return. So if you made it this far and you realize, oh my gosh, I really need to review my tax returns to make sure that, hey, I speak with the guy who prepared my tax returns. And by the way, if you find numbers that do not reflect, you need to talk to your tax professional. Now, here's I want to talk now about one of the big no-nos that we saw last year quite a bit. Taxpayers, excuse me, coming to us, telling us, "Hey, I have a day job," and then when we begin reviewing their tax returns, we find a Schedule C. When they didn't have a side hustle, they didn't have a self-employment, they didn't have nothing, right? And these, I don't know how to call these people out there, were just outright adding Schedule C on people's tax returns to create significant losses so that they can get huge refund to be sent first to their own bank account, and then they will send the difference to the taxpayer. That's a fraud. That's a crime that lands people to jail. If you suspect that somebody did something shady, something weird on your tax return, here's what you need to do right away. Number one, alert the IRS. Number two, alert the police. Number three, find a CPA who upholds higher standards of ethics to help you amend your tax returns. Here's the bad news. Because you filed a tax returns that did not reflect reality, the amended return is more likely to result on you owing taxes that you should have paid anyways to begin with. But because somebody thought they were smarter than the system, they wanted to commit a crime. Here's my recommendation: don't be part of this crime, don't join them. There are better ways to help you save money on taxes, and committing tax fraud is not one of them. It's not, my friends. So here's the last thing that I want to leave you with. We're about 25 minutes to this webinar, and I want to tell you, if you haven't filed your tax returns yet, call us today. Book a call with my team. We're going to handle your tax returns in the best possible way. As a CPA who follows the law, who wants to help people, who cares about your peace of mind and your pocket, we're going to get your taxes done. If you already filed your tax returns and you suddenly woke up to the realization, oh my gosh, I should have reviewed the tax return, and you didn't do a full review, I'll invite you to a 30-minute free review with me so that we can review what was filed for you. And if it was filed correctly, good, I'll let you know. But if it has any problem, I'll tell you what the problems are and what you would need to do to correct the course. If you now want to reach out to us, okay, just visit our webpage, yetuadvisory.com, or call our number 773-937-1264. So I am going to wrap up this call, this webinar, and I want to encourage you, if you realize your tax returns has mistake, take steps today. Don't wait tomorrow. Now that you realize it, act today.